to start, maybe we can do some quick intros. Corin, I'll start over with you.
Hi, everybody. I'm Corin. I work with Yearn Finance. We've been around for 5 years. We are one of DeFi's first projects out there, and we have a collection of vaults that users put money into, and we take those funds and we go and deposit them into a bunch of different lending markets for like great yields, and then we return everything back to the users, and we have about $750 million in those vaults today.
Hi, my name is Wayatt. I'm an investor at Castle Island Ventures. We're a Boston-based venture firm in the crypto space. We invest in financial market infrastructure and crypto and a heavy stablecoin lean.
Hi, I'm Will. I'm a crypto intel analyst at Coinbase on the listings team, and I'm primarily responsible for sourcing and doing due diligence on all the tokens we list on the centralized exchange.
And I'm Jake, one of the organizers of the conference, the Boston DAO, and I'm an investment partner at L1D, which is a crypto-focused fund where we have two products. One is a fund of funds product, and then the other is a venture product. So to talk about the future of crypto, I think, and forgive me if I monologue a bit here, but I think you have to talk about the history of crypto, and then we can kind of take it from there. So if you go back to the era of 2017, 2018, consensus mechanisms were all the rage. This is how we differentiated. We differentiated on technical things. Proof of work was what we were doing, and it was about kind of an era of scaling, etc. And then Ethereum transitioned over to proof of stake. We started to see these assets being issued on chain. This was kind of catalyzed by smart contracts actually working and being introduced into the programming. And the smart contracts allowed kind of like this DeFi summer thing that we talk about to happen, where we just started depositing random sums of money into programs that were built on more complex programs that we didn't really understand. And this DeFi summer led to something that was pretty apparent to all of us, which was like a congestion issue. And I think this is where like a lot of people got the idea that, maybe the next thing we should focus on was not DeFi, but maybe it was infrastructure. And so we went through this weird infra era, and I don't know about you guys, but this was definitely my least favorite era in crypto, where, well, there were a lot of interesting developments and useful developments, and today you can actually use crypto in a meaningful way. We also got a lot of like useless stuff. And after that infra era, I think, and this is my opinion, would love to get your guys' thoughts, but a lot of people in the space kind of got fed up in getting sold things that weren't really to what they believed to be valuable.
Are you talking about points?
Points was...
Just kidding, they weren't around back then.
There were some projects doing the points thing, right? But this, in my opinion, kind of catalyzed meme coins and what I consider to be like financial nihilism in this space. And so this brings us to today's era where we have this really weird combination of meme coins and equities, and stocks coming on chain and chains going on stocks, and like this weird mix where it's like the ocean has met the river. And so my first question to you guys is, like, today, right now, in your seat, if you were to project 5 years into the future, do you think financial nihilism dominates? Or are you optimistic in the same way that I think we were when yearn started, and these food farms started?
So back then, when the food farms were around, and this was around like May and June of 2020, interest rates in the traditional world, like the risk-free rate, was very low, less than 1%. And the only place people could really earn money digitally, in a meaningful way, like above 5% APY, was in DeFi. And that's how we onboarded all these people and all that TVL into DeFi to begin with. The scariest moments for me, we only do on-chain finance, was when the risk-free rate went up and above all of those lending rates at like Aave and Compound. Morpho wasn't around back then. That's when TVL started to bleed out of yearn and out of DeFi in general. And I think in the future, we're moving more toward a place, sorry I'm not talking about NFTs. We're moving more
I
toward
totally skipped that part. I forgot about that.
We're moving more toward a place where there's going to be a middle ground, and people who want to have exposure to yields in the digital world are going to use crypto rails to some degree in the future, whether they like it or not. And then the people who want to like operate in the traditional world, they will also be using crypto rails. So I think the yields, they kind of converge between these two worlds into one single like central point.
You hit on meme coins, Jake, and this point of like, are you cynical or are you optimistic to get to the crux of it? I think meme coins were the personification of something people wanted. It was the final form of it. Like people were speculating on Celestia, were speculating on Ondo, but that was just the best possible iteration of a speculative product we were giving people. And then meme coins emerge, and that to me is the proper peak. It's like, you can't speculate better than you can on meme coins. So I think that was in a way always going to happen. I also blame the financial markets function behind crypto because we started to feed retail tokens that were overpriced and had a lot of overhang, and retail just naturally got crushed on these things. So they're going to gravitate towards, granted something that's maybe meaningless, but at the same time something where you feel like you're playing a 50-50 game. I think that'll persist. I think people will want to do that continuously. I think Korn's point on yield is really important. There is a world here where interest rates and the risk-free rate drops in the real world, and certain events happen, in my view at least. I think that could set off a hyper DeFi cycle, which I worry about for other reasons, but I think that's a possibility here.
What are those reasons?
Why rates could come down?
Oh, no, that you worry about.
So one thing that I have been wondering a lot in the past year, and it's frankly less of a question now, was whether we being crypto users, as well as we being the protocols and the risk curators, would frankly make the same mistakes I think we made in 2021, which was immense levels of leverage, which was loan to values on the lending side that I think are really unsustainable and really risk on. And my answer would be unfortunately yes, like we are going to and making the same mistake. There's some of these stablecoin products and you see LTVs of like 92%, and essentially if someone has $100, they can go get $500, $600 of leverage off of that. That is sustainable for some time in an up market, but I'm just a believer that in a situation where you've $1 billion of actual money and you've $8 billion of leverage, that the come down from that's going to be really harsh, especially when all the asset prices are being propped up by DATs, by these equity vehicles, which are the last downstream buyer of all these assets, when we frankly can't find them in individuals. So I say that I worry about the DeFi regime we get to because it's already been on steroids and we are making those same mistakes. But in a world where all of a sudden rates drop to 0% and then 5 or 6% on USDC becomes really attractive, it's gonna get worse. And that could mean a steeper fall for all of us.
Or worse, better, kind of the same word, right?
It's the same thing.
Yeah. Will, do you have any thoughts? Financial nihilism versus optimism. What are you?
Well, I'm an optimist, and I think the reality is the whole meme coin cycle played out because we were constrained by regulatory, really. People weren't allowed to build real things, but there was a lot of appetite to get involved in crypto, and people started creating a lot of meme coins just because there was nothing else to do. I believe we're going to make more progress in the next 5 years than we made in the last 10 years, just because people are allowed to build now. I think in general, in terms of what direction that goes in, there are just so many. I'm personally a fan of this whole internet capital markets narrative that's emerging. I think there's a lot of pull in our capital markets today. I'll give you an example. My dad runs a small business, and there are 2 ways to raise capital if you're a small business owner. There are 2 ways to raise capital in general, it's debt and equity. But my dad basically, he was like, well, there are basically, going down the debt option, banks are terrible at giving out loans. It's a really stringent process. It's like a one-size-fits-all. It doesn't make sense for a lot of businesses, and it's gotten increasingly difficult since the financial crisis. And then there's the private credit market, which is, very not necessarily predatory, but bad deal terms.
I think
and then,
you could say predatory.
yeah, I guess, okay, we'll go with that. But then, you go down the equity route, and the reality is for a lot of businesses, it doesn't necessarily make sense. Well, it doesn't make sense for anyone from the venture capitalist side or the entrepreneur side to raise venture capital because a lot of businesses aren't going to reach venture scale. So then you can go down the private equity route. But the problem is, right now those markets are really undemocratic. Private equity firms have a lot of asymmetric market power. But then you think about the future and you're like, the SEC recently came out with a statement basically saying they don't want to hinder anyone in terms of raising capital on chain. And you open up this new democratic, it's really democratizing finance where you're enabling all of these small and medium-sized businesses potentially in the future to go and raise capital on chain, and sort of in a crowdsourced fashion. I think that's going to be revolutionary.
Okay, so kind of trying to decide which way do I want to take this. Either I take this the product direction or I take this the regulatory direction. Maybe we can find an intermixing here. There's a topic that's come up recently that's very topical that I wanted to get your thoughts on as to whether this is a flash in the pan like meta or if this is a long-term game and something that we will see persistently throughout the world in the future. And to me, this topic is streamer coins. So maybe we'll start with you. From your perspective, I won't ask you to give us the perspective of Coinbase because I think they have to have a very rigid perspective on this. But from your perspective, what do you make of streamer coins? Maybe you can explain for the people listening a little bit about what this idea is.
In terms of streamer coins, are you talking about things like Zora?
Yeah, Zora, Creator Coin, Pump, Streamer Coin, that kind of trend that we're seeing here.
Yeah. I think obviously those are going to persist. Pump has obviously found, huge product market fit. And it's basically enabling the creator economy, which I think is a good thing. As far as specific opinions on Zora and the Coinit, I think some people are deeper into that than I am, frankly. I've been observing at a higher level. But I think more people in general getting involved in these platforms enabling more people to get involved in the on-chain ecosystem as an individual is very impactful.
Corin, I saw you wanted to jump in there.
I was going to give a view from the trenches.
Yeah, give us the trenches.
So I've been keeping an eye on how Pump came to market with their streaming a long time ago, and they had to shut it down. I didn't really pay attention to it until a few weeks ago when I heard it was spun back up. And when I first went back on there were a bunch of streams at the top with really low market caps, because every time someone starts a stream, they have the ability to also either launch a token at the same time, or they can continue streaming based on the token that they previously made days ago or weeks ago. And the ones that are coming online now, some of these streamers, what they're doing is they're doing a stream, and then once it ends, they just dump all the tokens on the viewers, and that's it. That's the end of it. And then they'll come online the next day and do it again and again and again. And that's the extractive play right now. But there are some people who are doing this day after day after day with structure, this is a workout routine that I do, or this is there are a bunch of other streamers who do this on there right now, but they come day after day, and the people who are watching them get to know them, they get to grow their audience, and the coins are going up. The market caps are now in the millions on the top row for the Pump Fund streams, and I thought that was really interesting to see grow 0 to 1 and see who are the extractive people, who are the people who are actually doing meaningful content creation. And I think that platform has the long way to go. And it maybe even is the connection between like social media, mainstream social media, and crypto.
Wyatt?
Yeah, to me, this is an evolved version of the attention economy. And I'm a subscriber to this view that a lot of the way that we see crypto tokens move in certain ways is an embodiment of the attention they're getting. And I think you see this in traditional markets to some degree as well. And creator coins are like a version of that. The thing that concerns me a lot here is crypto in general creates better financial markets and market discovery, which can be a very good thing. I think it can also be a very ugly thing, and we're kind of only seeing where the tip of that spear is gonna go. So people can now create these markets where you can allow people to invest in things that draw attention. You can potentially use financial systems to promote behaviors that might not be common good or net good, and that's what concerns me, is that there are these incentive flywheels, try to get people to do something online, promote bad behavior. And I worry about that, but I do think that like this is just true market efficiency.
Okay, so steering this in like another direction, I think, having just listened to the policy panel, one thing that obviously sticks out to me is we have a very obvious definition of what a security is, right? Like, it's pretty clear when you apply it to TradFi, and then when you apply it to crypto, for some reason, I feel like a lot of people are like, whoa, I don't know how that applies here, when it's like still pretty straightforward. And it's like, it's really about whether or not you're promising anything, right, within the investment contract. Like, am I saying, invest in us and we're going to try to make this worth more? Or am I just saying like, no, I'm literally gonna dump this on you. You should not invest in this. And if you do, that's on you, right? And that's kind of like Hester Pierce's take on securities is like, hey look, if somebody is giving you no assurances whatsoever that this is an investment, then you really cannot treat it as a security. Creator coins feel to me like they are leaning on that securities side. And for that reason, I get like a little cautious of this meta. I think it's like a little bit more short term. But to kind of open the question up to you guys, like when you are looking at this space, you know, you guys are making long-term decisions of how to survive in the space. To what extent do you like put any regulatory burden into your calculation? Like, are you guys worried about the regulation here? How do you look at regulation as it applies within the United States? I think we'll ignore the rest.
I can think of many times waking up in the middle of the night in 2021 through 2024, like sweating, thinking about this stuff. And now, I don't know, it just is not top of mind.
Now you're just biking.
Now I just focus on pushing the pedals.
I think the toughest part of engaging with this, and I'd say we and portfolio companies of ours have been conservative when it comes to regulation to a fault, to our detriment. And the hardest part is that we go between regimes of different levels of regulatory enforcement, which makes it really difficult to operate. Because I'd say if you look at the last 24 months, you had many actors who I'd argue were handsomely rewarded for essentially breaking the rules, and there's just a non-enforcement regime, and there continues to be a non-enforcement regime, which I struggle with because that incentivizes that behavior. Like, you should, if I were giving advice to a founder who was risk on and wanted to maximize return in the next 12 months, I'd be like, go do something blatantly illegal in a jurisdiction where you can make a straw man argument to do it, and you'll probably do very well. I wouldn't bank on that on like a 3-year time horizon though. I think we're gonna get a much more enforcing regime, so you have to think hard about that. But it's been a difficult landscape in that regard because we have, I can't think of any substantive enforcement in the last 12 months when we've had breakthrough products that are definitionally not legal.
Yeah, I think we've learned a lot about sort of the role regulation plays in shaping this industry. You know, the last few years before, you know, the admin change, it was pretty brutal. I think, in general, I'll say something I've learned, I guess, from the most recent election cycle, and then I'll, I guess, discuss how I approach it personally. But I generally believe that regulation does exist downstream of innovation. And I think that if you're truly innovating and trying to improve the world, eventually regulatory will catch up to enable you to do that. But it takes time. And it's going to take longer, it will take a longer amount of time if you're not there advocating and educating others on why it's important, which I think the industry has done a much better job of recently.
Okay, I have a fun question now. And some context here is, I didn't really prepare this panel. I told them that we would do the panel, and that I would send them questions, and I never did that. But the way I did prepare it is I did something very smart. I told them to write questions. So after this question, I want to kind of open it up to them to ask the questions that they prepared, but I like this one. So I said something to Wayatt the other day, and he didn't like it. And so I want you guys to kind of pick a side here. I said, I think the only three things that matter in the future from an investment perspective are robots, AI, and crypto. And so let's say you could pick a good portfolio in any of these three categories, but you have to pick one of those categories. Maybe we can just go down the line and say, which one are you picking? And if you want to say why. So, Corn, do you want to start?
Is this what I'm investing in or what I'm interested in?
Set it and forget it portfolio. You don't get to change it for 20 years.
Yeah, I'd have to say crypto. Should I say why?
That'd be nice.
I think the rails for finance and other industries also, including gaming, will be built on crypto rails in the future. 100%.
Why? Can you say this legally?
Yeah, definitely. I mean, I would probably say AI, but part of the reasons I think we could have more meaningful turnover because of market dynamics on the crypto side. Like, I don't think I'd necessarily want to own an index. I love Ethereum, I guess is like disclaimer, but I don't know if I'd want to own an index of those things. I don't think there's necessarily the same defensibility on a longer term horizon.
Will?
Well, I think all three of those are primed really well to grow exponentially. It's a really difficult question.
Okay, I'll make it harder. You have to short one and long the other.
Oh God. What I will say though is, yeah, I think though the real question is within that, like, which bets are you making within those categories? I think that's really the more interesting question, right?
This is a very good way to skirt the question.
I'm gonna skirt. Yeah, I mean, right, we're all here. Like, I'm obviously a crypto first person, but I think AI is going to impact the world. It's a more of a horizontal layer, right?
I think that's a fair answer. I noticed nobody said robots, so I'll make an argument. Crypto and AI are both very scalable software, designed to be scaled actually. Robots are not extremely scalable in the same way, and the demand for them is equal, if not more, than the other two sectors. And so I think there's a compelling argument that assets in the robot class will be scarcer and do better if you assume the same demand. And I think the demand might be bigger. So supply demand, I'll say robots for the sake of argument.
It's a good thing this is called the Future of Crypto panel.
Robots can transact in crypto. That's my bad. Well, do one of you guys want to ask one of your questions?
Yeah, I can. So I took a little time before this panel to go back through my Twitter over the past few months, and I was just looking at things that I was talking about and themes and stuff like that. And one of them that came up was around gaming. And I took a look at this game called MapleStory, which is a reboot of a very old game. It's now on Avalanche, and I was not. It's been a while since I looked at it, and they have on-chain. They have a currency, and it's not like a USD type currency. It's just like a currency called NextPace. $680 million market cap with $18 million of volume, and this is the currency for their game. And there are other games out there that have currencies and economics like RuneScape. In RuneScape, you can even bond your money to earn more money or to like get a discount on your monthly fees and stuff like that. If MapleStory's doing this and like doing this on crypto rails and being really successful, this is just the tip of the iceberg for an industry that's bigger than the movie industry, the music industry combined. You know?
Wow. Is this a question?
Now, here's the question. What is one thing that like surprised you in the past few months about crypto that like people have been talking about for ages and ages and ages and like finally came to be?
Okay. Yes. The thing that has surprised me the most about crypto and that I would consider to be one of the most important things to happen in crypto that people are sleeping on is clarity. In the fact that market structure is actually happening in the United States. I entered the space in 2016, and to me it was inconceivable that we would ever have tokens that could accrue true value, like fundamental value. So we've pretty much focused everything on like how can we create proxies to value. And I think this is like, if we can pass this one law, then everything we have been working for is worth it. But it's just this one thing that's standing in our way. And so to me, like, just the first passing of that was very interesting.
Yeah, no, I definitely agree there. I feel like there's obviously just been so much progress in the last few months. Something that's kind of been surprising for me has been realizing how disconnected Wall Street was from everything we're doing. You're seeing all these treasury vehicles play out. Tom Lee gets on CNBC and starts talking about ETH, and suddenly everyone gets it. And but it's a great thing. Like, the world's waking up, so it's been a very positive development.
What do they get? Anyways, Wyatt, go.
My response is like miles left on the curve of where you guys are. But in all seriousness, I was at this conference last year and they were doing the panel on community growth. And someone on stage was asked what community has the best growth, and he said XRP. And I laughed when he said that, which I think most of them did, and he said, no, I'm serious. And a few months later, Ripple just went on this heroic run, yeah, where it was worth more than Solana, the Solana XRP flippening. And that's one of the things I didn't think was possible before it happened. I would have said there's no chance this will happen. And I think we can be pretty disparaging to like some of the people who are like your friend who heard about XRP and doesn't know about yearn or any of these things. But it speaks to like the reach of the enthusiasm. Like, people get really excited about this, and that can be like a gateway for them into crypto or the industry. And it tells you that they, like, I get really disillusioned. I was talking with a downstream buyer, like, are there people still interested who will be incrementally? And to me, like, maybe that's not the perfect form factor, but it speaks to like there is a increasing frontier of interest here.
I love that nobody said the president launching a meme coin.
That was my runner-up.
Maybe, Wyatt, do you have a question for us?
Yeah. Something I like to think about is like, well, what's the thing that's happening that's really significant right now, maybe even on a small scale, that people aren't appreciating the gravitas of? So it's like, in 5 years, what will we look at and say, like, that was an important moment in the history of what we're doing? So an example would be, 5 years ago, I don't think people were thinking about Tethermush or thinking about Binance peer-to-peer, and this is like an immense payment system that was being built in the underground global finance, I would argue. And I think there are things like that where you only recognize how important they are in retrospect. So I would ask, what's the thing that you think is underappreciated today, but is really meaningful, and that we'll look back and be like, that was an important thing?
Okay. I'll start so that you guys have time to think of a better answer. One that I've been thinking a lot about recently is, like, we're investors in Morpho. They just rolled out Morpho V2. And we're starting to see kind of like the design space open up for RWA lending or really off-chain lending executed on-chain. And this is where, Will, you were talking about your dad trying to raise money on the equity side. But you also mentioned that there's a way to raise money on the debt side, right? And like the world of debt is multiplicative. Like it's so many times larger than the world of strictly capital. And I think the interesting thing about debt and growth in an economy, when you think about what role it plays in the economy, is settlement in cash. An economy can only grow at a linear pace. But with debt, you can grow at an exponential pace, and that's because you're essentially like rehypothecating and allocating efficiently that capital to the use cases that will accelerate the economy. So, to sum it all up, it's like when we first, started to see DeFi come out, and you had MakerDAO release DAI, it was cool, but then you had this stark realization where you're like, so you're saying I need to put $200 down to get $100? Like, I think everybody kind of had that moment where they're just like, it's not as good as I think it is. And so finally, with like kind of the KYC hooks and all this infrastructure, tomorrow Predicate will be up here talking about what they're working on. There's a lot of these companies that are coming out of the woodwork that are making use cases that we always dreamt of an actual reality. And to me, that one starts with RWA and off-chain debt going on-chain.
Yeah, I think for me, I'll sort of discuss something slightly different, but for me, something that's been underappreciated, well, it's been appreciated, but maybe not to the degree I think it's really going to change things. It's been the rise of prediction markets recently. And the reason why is I think just through AI and tech and social media, we've never lived in a time in which seeking truth was so opaque, so the lines get so blurred. And the markets are truly the best source of truth out there. You can't find a better source of truth. And the rise of prediction markets are going to really educate people on that point and also enable us to find truth in the future when the lines become increasingly blurred.
I would say Wyoming coming out with their own currency. I don't know a lot of details behind it or behind finance of like how states operate, to be honest, but if every state had its own currency or like operated its own Fed or like print its own money, I mean, that's gonna blow our minds, I think.
I'm also glad none of us had a bearish take there. Also I think there's some other things that are underappreciated, like some of the activities in DeFi right now related to looping, definitely underappreciated, will have an outsized impact. I don't know if it'll be a positive one. Will, I think we have time for your question, if you have one.
Yeah, I do. So my question is, obviously stablecoins are top of mind for everyone right now. I think everyone sees that they're the future, but specifically for Wayatt and you guys, just because I know Wayatt focuses a lot of his attention on stablecoins, I'm curious how you see it all playing out though. I think everyone knows it's the future, but curious to get your take on how you see it all playing out.
Like, what does the world look like in a stablecoin future is kind of the question.
Or like even recently, right? Like ARC launching, Tempo, and I think that's even changed how people view this whole sort of stablecoin adoption playing out now, where it's like, oh, okay, maybe actually there's going to be many different L1s. Is it going to live, are all stablecoins going to live on an L2? Is it like, also, how do you think merchants are going to start adopting these things? So I'll keep it very open-ended, and you can plug in.
I think in terms of leverage and power dynamics, the system will eventually look somewhat similar to the traditional financial system we have now, where there will be almost a pyramid structure, where there's some type of roll-up layer on the top. It's like this is the universal stablecoin standard, and USDC sits somewhere down here, USDT sits somewhere down here, Tempo sits here, Base sits here, and you have this tree structure almost.
Pyramid scheme?
No, not exactly. And then I think that the interesting, it's a little more obvious. A lot of enterprises will use stable coins because of the simplicity. I think what will be really interesting will be the impact on nation states. And I think if you look at the accessibility of dollars combined with the accessibility of skills and resources online, we're going to have this impact where people globally are going to start to be employed more by companies, organizations in the US, in the UK, in Europe, because they have the skill set and the leverage to actually impact those businesses from all over the world now. They'll be paid in stable coins. I think they'll opt into having US dollars because it's frankly a more stable currency and an alternative store of value. And I think that will create major structural issues for countries, frankly, all over the world. Because when given an alternative store of value, I think a lot of people will turn to that, and you start to lose control over your domestic monetary system. Future form, I wonder if the US dollar, we're exporting the US dollar essentially, that becomes a dominant form of trade and store of value in a lot of places globally. The alternative is that there's a real pushback against that from regimes globally, which I think also will probably happen. It's just about how strong that is. So I think we're going to see wide adoption, which is going to be buoyed by the accessibility of resources and skills.
Corin, do you want to go and then I'll wrap up?
Are any of those countries like happy that their folks are like using US dollars?
It depends what kind of leadership you have. If you have like a Malay in Argentina, then like much more receptive to it, and they'll take the attitude of like, we've struggled to set up a stable financial system here over the long term, but I'd say in most cases there's going to be opposition. But it's hard to stop if you already get to adoption rates that could be at like 10, 20, 30, 40%. You can't just rip stable coins out of people's hands at that.
So, as a relatively smooth transition, if I do say so myself, my answer to the question is that I think I share a lot of views with our next speaker on this topic. And so our next speaker will be Seth Pribosh. He's a Boston local, started his company in Boston, and has spoken at several ETH Bostons before. And so before I hand it over to him, I want to give a round of applause for our panelists here. And I have one last question before we get shoot off stage. Single answer. We do our summit every year in Switzerland, and every year I go up there and I say, like, this year Solana is on top. And then the next year I go up there and I'm like, okay, well, now Solana is not on top, it's Ethereum on top. And that's this year, right? And then the next year, I'm pretty certain that when I do this, there will be a different answer. And so my one word question for you is, not Solana, not Ethereum, what's on top next year? And it can be Bitcoin.
It's got to be some stable. I don't know.
Let's say Circle.
So ARC.
Yeah, Circle, yeah, but broader.
I actually don't know if I can answer that, just given my role.
I'll go Monad. You take Tempo, Corin.
Tempo.
Okay. Thank you, everybody.